We have an extraordinary two guests here. We have Neel Kashkari from the Minneapolis Fed and Austan Goolsbee from Chicago Fed. And what you may not know is that they sit together at the FOMC meeting, although apparently it's reversed.
Yes, we're like the two guys on the Muppet Show,
okay,
up in the balcony.
Gentlemen, I did a little research before we started. The Vikings over the Bears, 65, 57, and 2. However, and the Vikings have a real good home advantage,
fake news,
38-24 over the Bears. However, the Bulls have an advantage over the Timberwolves, 39-28. So we'll see how we score this at the end, okay?
Okay.
Neel, we're going to start off with you. You written a piece on Tuesday talking about this idea, using the 10-year tips as the measure of how restrictive the Fed is. So give us a very quick explanation of why that's a good measure, but more importantly, how restrictive is the Fed right now?
Well, in a sense, we have 6 policy tools: the federal funds rate, the expected path of the federal funds rate, the balance sheet, expected path of the balance sheet, actually 4, excuse me. And how do you put all that together and say how restrictive is policy? The thing I like about the 10-year tips, it incorporates all of those factors and the outlook for inflation over the next 10 years. And we know investors base their investment decisions on longer-term interest rates, not on overnight interest rates. So for me, if I had to pick one measure on how restrictive policy is, it's the 10-year tips relative to where we were before the crisis or some version of
neutral. And that's come down a little bit. It's 2.1. Is that good enough for you?
Well, we've raised the 10-year tips by about 200 basis points since before the pandemic, which is about equivalent to as much tightening as we did in the 1994 tightening cycle. That suggests policy should be pretty tight. But when I look at real activity, such as in the housing market, we're not seeing as much of a pullback as I would have expected. And that's what makes me cautious that maybe we're not having as much downward pressure as 200 basis points of long tightening would have implied.
Austan, are you as cautious based on the economic data? This is maybe we're not as tight, maybe the Fed is not as tight as they thought they'd be, given how much rates have come up?
I would say Neel and I are both in it sounds like a spot where we've had cross currents coming through in the data. We had inflation, which I've been highlighting, the price inflation data, and especially the housing part of it, has been forefront on my mind. We had great progress in 2023, and we've hit these bumps at the beginning of 24, and it feels like we're both saying we need to gather more information and wait and see. On the question of are we restrictive, the Fed doesn't really control long rates. There's a lot that goes into longer rates. So I tend to look at the Fed funds rate minus inflation, the real Fed funds rate. And to me, the level of that is as high as it's been in some time. Right. So I feel like we're in a restrictive.
But let me respond to my good buddy Austan. We do this in FOMC meetings. Yeah. I was at the Milken conference earlier this week. Yeah. And the number one comment that I heard from major investors was, why does the Fed keep saying that financial conditions are tight? They're not tight. We think that monetary policy in part works through financial conditions. And if the business community does not feel like financial conditions are tight, that makes me question maybe we're not as restrictive as we would have guessed.
Right, but it begs the question, do you want to go higher then and to make it really tight?
Well, for me, I think...
Don't tempt him.
No, he made me do that.
Austan and I are actually landing in a similar place from different perspectives. I'm in a wait-and-see mode. Let's get a lot more data to see if disinflation is going to continue or if we're stalling out.
But you're not ruling it out, Neel.
Well, you can't. Nobody can rule it out. We are all committed to getting inflation back.
What about you?
I don't know. I don't rule. Everything. Nothing is never not on the table. And the job of central bankers to be paranoid about everything.
One of your colleagues this morning, Austan, said that she did not believe that rates should be cut this year.
Was that a question?
It is a question.
Okay. Look, as you know, I don't like tying our hands, even partially, when we're going to get a lot of data and important information before the next meeting, much less for the rest of the year. Mm-hmm. I think I don't want to speculate about the conditions. What we need, the data dogs need to do some sniffing and figure out, are we going to be on the path like what we saw last year, where inflation fell almost as much as it has ever fallen in a year without a recession, or did we kind of use up all of our good luck and this bump of the beginning of the year is actually a sign of overheating? That's the thing that we're trying to wrap our head.
Before you answer that question, I'm going to throw this question to you, but he called this inflation the last couple months bumps. How do you think about it?
I don't know. We saw massive, I know Austin and I agree, we saw tremendous gains in the supply side of the economy last year that drove a lot of the disinflation that we experienced. The question I have is, are we going to get more supply side gains? I'm a little suspect of that. And if now it's up to monetary policy to bring inflation from 3% to 2%, that's why my question of how tight are conditions right now, to me that's paramount, because if it's all up to us and not the supply side, then we need to pay very close attention to whether or not conditions are tight enough. And I just don't know right now.
How do you respond to what your colleague said this morning about the idea that maybe we don't need to cut this year? Maybe we can't cut this year.
Then Austin and I are in exactly the same place. We need to get more data in, a lot more inflation data. We have a dual mandate, have to watch both sides of the dual mandate. That will guide us. So I don't know. I'd rather speak in scenarios than in saying this is necessarily what I think is going to happen.